The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. Let's check out where the markets are at right now. We have the S&P is currently down just a couple points. The Russell is down 3.7. NASDAQ's down 9, and the Dow's down 34. Looking on over at our metal markets, we got copper is about up 0.75%. Gold's up over 0.5% right now, 8 points. Right now, silver is up 0.75%. So the metals all moving stronger. Going on to the energy sector, we have natural gas is currently down 2%, and oil on the flip side is up over 3%, moving on up and breaking that $50 barrier again. And some nice big movements in the energy markets today. Going on into our ag markets, we got corn is currently down 1%, and we have soybeans down 0.5%. Diving into the FX markets, we got pound dollars down 19 pips. Euro dollar is down 60. The dollar franc is currently up 3 pips, with the dollar yen up 37, and the euro yen, US yen down 37, and the euro yen down 130 pips. Some big moves there. Euro pound down 22, Aussie yen down 58. Aussie dollar is down 120 pips. So looking on over at pound yen down 79, euro franc down 56, pound franc down 19, and dollar CAD down 41. Bonds are slightly negative right now, down 1%. I'm sorry, Aussie dollar is down 14 pips. The bonds that were down so much, you don't even see that often. So down like 1%. Big move on the bonds. King dollar moving up 0.25% on the day. So that catches us up. What's going on right there? Let's see here. Some news happening. European shares fell for a second day. This is, of course, pre-market open here. Led by their tech sector. And going in, the U.S. initial jobs claim was negative. As, the wealthier normalized, there's all sorts of other stuff on there, but initial job claims negative. Natural gas supplies came in at 12 billion cubic a square inch. Let me go ahead and bring up the news thing here, since we're bringing this up right now. And go through that. So pulled up natural gas right here, and basically came in just a little over expectations. Not really a massive difference there, but still getting some massive moves. And going into oil, surging after the Saudi airstrikes in Yemen that have been happening. So it's like Saudi airstrikes happening in Yemen, and that causing oil to move on up. Let's see here. S&P tumbling into the red year to date, and gold starting to move on back up. So with those big moves that we had yesterday, and sort of rolling into today. And let's bring up a couple charts. Let's check a few things out. Give me a second. I'll get these open for you, and we'll walk through them together. And also we'll talk about a couple other things today. Go through some of the new announcements coming up that have happened on Nadex. And we'll also talk about liquidity and talk about DOMs a little bit and see how much we can get into that. Volatility today, perfect for, 20-minute strangles. So we'll go into that as well. So just give me 1 minute. We'll pull up a few different things and dive into it. And I'm open up, let's see here. Let me get S&P. We'll start out with the S&P, because you can do these 20-minute strangles on Nadex. And there we go. Okay, so just pulling this up. It's a simple, basic chart here. And with that up, go in, we'll add, put a template on here. And right on down here, I'm using Ninja Trader here. And I like the platform a lot. Basically, there's nothing you can't do with it, so you have to dive in and figure out how to make it work, but there's a lot of possibilities on it. And let's see, where is my favorite TFNN template? I have one on here, I know. There it is. Okay, so got that all pulled up. And so we can see the ranges today. I mean, the S&P, massive move down to not only one, we see it paused right there at the one deviation move, and then moved on down to 1.5. And then today you can see it popping all the way down one deviation and all the way back up. So to some great volatility. And, something I'd like to show you. So we dive in here, and I'm just going to put expected ranges on a chart for you. Okay. And with these expected ranges, talk to you a little bit about the straddles and strangles. And so once those come on up, basically, what is the expected move? And, how could that work? And basically, what I like to do is I like to do strangles if I can, whenever I see that there are large moves where volume is exceeding expectations. So that volume exceeding expectations is sort of the big key. And they start up. I need to go in and make one more change on these. I got these on hourlies, but we're talking about 20 minutes. So with the expected range on here, I'm going to go ahead and go into and make, okay, what is the movement per 20 minutes like? Okay. And after that opens up, then we can look and see, is volume exceeding expectations? Yes, it is. And so when it is, we basically expect it to hit these ranges at least. And so when it opens up right over here, boom, it pops on up. We got another one that comes down, goes up, and here's another one goes up. This one goes down. This one goes up. So you can see over and over again, just looking at this. This is really, really basic. I'm not diving into a lot of other little details I could dive into. But when the volume is exceeding expectations, especially when it's climbing, okay, which is what I really like. I like to see volume. So this is a blue with this. And I'll shrink that on down. So the blue is volume, and then the yellow line there are the expectations of volume for that specific time period. And when I see it rising, okay, that's when I'm like, okay, now it's strangle time. And so we're going over here, sort of declining, so I'm going to back off a little bit on this one. But then all of a sudden volume exceeds, boom, right there on the close of 10 a.m. So I'm looking for a 10-20 strangle. And so when I see that, now actually let me start here. I want to do a couple different things with you. One is if I see volume declining, I like to look for iron butterfly. So volume's declining down. I know that on at 9:40, right when the 10 a.m.'s open. So when I see that, what am I looking for? I'm looking for it to basically not break out of the range or not even hit the range. And so I look and I try to do an iron butterfly. I buy a 20-minute binary below and I sell a 20-minute binary above. Okay? So that one right there would be an iron butterfly. But then we go in and right here on the close of this 20 minutes at 10 a.m., we see volume is exceeding expectations. All right, now it's strangle time. Can I get a good cheap strangle on, at the ranges there? If I can, boom, hop in, take your profit, be done. Next trade. Comes on down. And volume pops back up, exceeds expectations again, right here in the last part of that 20 minutes. And so I do another strangle. And I really like this because here's something to sort of point out to you. Notice how the ranges are larger for this 10 to 10-20 period, and they get smaller. Okay? And so when they get smaller, that usually is a less volatile time. But then all of a sudden we see that volume is exceeding expectations. That means we're probably going to have cheaper binaries. And you can sort of see this on this orange line. This is basically saying what the range is. And notice how it's dropping. You're getting smaller and smaller and smaller. That usually means we're going to see the cost of the binaries go down. And so it's going to be easier to get on a cheaper strangle. And so boom, it pops up, get in, flies on up right there. Okay. Now it's starting to decline. So I'm going to be looking more for an iron butterfly. It does stay inside the range. So just right inside the range there. Okay. And then I'm looking at still declining, and then all of a sudden it pops up. Boom, we're looking for, a strangle on that one. It goes in, starting to exceed. This one's going to be a tough choice. So we see declining is under expectations. And so we're going to have to look and see what our cost is. Can we even I bet you can't even get a good butterfly at this cost. So if you can get a cheap strangle, volume staying above, if it's really cheap. Okay, I'm going to be really picky if I don't see volume exceeding. If I'm going to go in and I'm going to do a strangle, I want to see volume exceeding expectations, and I want to see it really cheap. Now, if I see volumes exceeding and rising, then I'm going to be a little bit more lenient on which strangle I choose. So we go in, boom, we get another one. Okay, this one made it a little bit easier. Volume pops up, exceeds expectations. Okay, let's put on a strangle. Boom, it goes all the way up there. And we go over here, do another one. It is exceeding. You get a cheap one on, you go in, just take that profit. Don't let it come back, okay? We go in, it's exceeding again. We have another strangle. Look how it moves on down. We have another one again. Boom. Happens again. Volume is rising right here on this bar. Boom. Okay, so let's do a strangle. And look how it's already breaking out of the expectations and volume continuing to exceed expectations. So great time to do strangles like that or butterflies. You just really got to watch the volume. Look at the expectations. Is it going up? Is it going down? Is it exceeding? You know, be careful on doing butterflies when it's exceeding expectations, even if it's declining some, okay? But if it's not rising, make sure you get really cheap strangles if you're going to do the strangles on them. So in a summary, what I'd say is I look for, if I'm doing a strangle, I want volume to exceed expectations. If it's declining, but it's still exceeding, or if it's just barely exceeding, I want that strangle to be close and cheap, okay? If it's rising and exceeding expectations, it can be a little bit further away. I still want a good profit on it, but it can be a little further away because I expect it to explode and move outside that expected range. So hopefully that gives you, a few different tips. Also, get ready. You got this trade's coming up here in a few minutes. This is going to close. Can we find, a cheap strangle or not? If volume's exceeding by the end of it, then we definitely want a cheap one. If it's not exceeding, then we want to be just a little bit pickier on the trade that we choose. And let me see here. Let me close something down. Open. I had it opened up a second ago. Just I got so many windows. And let's see here. I know I have it. Give me 1 second. And let's pull the scanner up. And we'll look at the binaries. And we'll say we're looking for ones that are no more than $35. Okay. That'll expire in the next 30 minutes here. And we're looking at the U.S. indices only, okay? So now instead of clicking all over the NADEX platform, I've now narrowed it down to, what's available. So those are all the ones available on the 120 strike. So we're going to come up and we're going to see, we're going to let's just focus on the S&P for a moment. And so here when the new strikes come up in about a minute, we'll be ready to be watching and seeing what's potentially going to happen. If I go over here, I can actually get an idea of the next expected range. So we got 2052 down to 2044, 45. And so we'll check that out when we get back right after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on NADEX in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade NADEX spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the NADEX exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the NADEX box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, so as I said, we were looking right around 2040, 6 or so, and right around 2052. So we'll see how this trade works out, but basically looking at doing a short 2046 and a long 2052, and just letting the market, setting my take profits. Basically, I'm going to lose, up to $15 on one side or the other, most likely, unless it hits both sides, which is pretty rare. And so I need to make, $30 because I'm risking 30, and ideally cover the other 15, okay, on the trade as well. And so ideally, if I can make $45 on this trade by the end of the 20 minutes, which means I'd want to, sell back, right around here at around 40, or buy back, I'm sorry. So I sold at 84, I'd want to buy like around 40. Or if I bought, I'd want to sell back right up here around 60. So sorry for the, it's a little hard to draw with this snippet thing. But, so exited, basically this is my total that I'm trying to make on one side or the other. If I do that, then that gives me a 1-to-1 risk to reward. Why would I not just hold it would be one of the questions people often ask. Well, because it can easily go up and then just pull right back on you. Okay? So I'd prefer to not have that be the case. Anyway, so we got that trade. So like I said, it can go down, pull back up. And that's an example of doing a 20-minute strangle. And, setting take profit orders and all that fun stuff in there. Okay? All right, so that was one of the topics, but again, main thing I wanted to focus on there was just the S&P having nice volatility, lots of good movement. Hopefully, you've been able to take some advantage of that. Let's go ahead and let's look over at natural gas. We talked about the natural gas inventory report that came out today. And we can see that it definitely had a nice move. Where to? Well, let's just zoom right on in over here. You can see it came right on down to 1 deviation as expected, even off the natural gas report. That was built into the implied volatility of the options and went right to where we said it would go. And so that sets up all sorts of potential trades like pullbacks and things like that. Like you could say, hey, I'm going to go ahead as soon as I can buy a pretty good at the money, option right here. Maybe that's what I want to buy, or in the money option I want to buy. So that is one way you can look at potentially doing these trades. And then what else we got? We got oil. So oil lined on up. And also this is what by the way, if you were in natural gas, if you were taking that short, where you'd want to take profit, because that's all you should really expect on the day. Going on into oil, and it having its big move on up. Let's see what's going on. So anytime there's any kind of war stuff, that of course increases that price on up. And so it ran up to, it's been really volatile. And really last night it took off. As you can see, it ran up to 1 deviation, 1.5, even up to 2 deviations. It pulled all the way back down to 0.5. So 1.5 deviation pullback. And it is running right back up, almost to a 1 deviation move back up to 1.5 right now, 51.54. So some big movements on oil, busting through $50 with a lot of strength in that process. And then we talked about gold moving around. So let's pull up the gold contract. And give me 1 second, I'll get that up. So gold we show shot up like lightning as all this was happening. Ran up to 2 deviation move last night. Just a phenomenal gold trade right there. And I think it was trending. It wasn't like this happened after a day. I mean, it was literally just trending up, not pullbacks, not choppy, just a nice uptrend, and then took off and bumped that 2 deviation level pretty much to the tick. Let's see, what was the high of that? Let's see, we'll get that off the chart here. The high was 19.5. So within a tick of 2 deviations. And then makes a massive retracement on down to 1, oscillates there, then on back down to 0.5, and has been pretty much choppy ever since. Going on in, and a couple other things. Oil has rolled over. So make sure you've updated. Natural gas also rolled over, and just make sure you're on the correct contract on whatever charting platform you use. So if you ever want to know what the roll is basically when traders shift from trading one future contract to another future contract, and we'll talk about that in a minute, as well as liquidity and some other things as well. Stay right there. We'll be back right after this.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, an update for you. We did hit our take profit on that. Easy $300 in the last 15 minutes. Gotta love that. I'll bring up those trades and review it for you. Just wanted to stay on topic real quick. If you go on over to energy, and so trading, energy, and then go down to, say, oil, then what you'll see under the quote section is you'll see the volume. And you can see basically where volume is at. Now it's on May, 395,000 contracts, okay? And what if we go over and let's go back to our energy section. Let's look at natural gas. And so right here on natural gas, I'm on cmegroup.com. In other quotes, you'll see where the volume is, and it's on May. So everything's rolled over to May. That's where the volume is. Now, if you're trading Nadex, you need to stay on the contract they're on because they don't trade on the – they change either like basically the Monday before or the Monday after the CME roll happens, okay? But just because there is a roll date, like CME is rolling today, and you get this announcement from your broker that S&P is rolling today, until you can roll that day if you want to, but I wait until I see the volume being greater than the previous month. So when I see May overtaking April, boom, I roll to May. Okay, so a lot of times this actually results in me, like they may say, hey, it's rolling on Thursday. I may actually roll over on Monday because I don't see the volume exceeding on Thursday. I see that April has higher volume. And then I look at it, and then all of a sudden, on Friday, I see it's about equal. Monday, it's well overtaking it, then I'm rolling. So basically, it's just going with the most liquid month is the simplest way I can put rolling, and that's a very easy way for you to see multiple months at one time. Okay. Now let's go back and let's do a recap on the S&P trade because we opened it and closed it right here. So pulling up back the S&P, and as you know, I showed you the screenshot. We're doing all this live, and it's fun to do some live trades on air, and just to let you see them in action. Okay. And let's look at what we were looking at. So what we were looking at first is we were looking to do a strangle if volume was exceeding expectations. So volume was exceeding expectations. And we were going, hey, was it, moving up, or could we get one cheap? Well, volume did drop a little bit on that 5-minute period, but we could still get them for a good price. Wasn't just a massive decline in the volume. And then by the time we got it on there, right there, like, boom, the thing is actually going up. So we got in right here at the end of this 20-minute period. And so let's look at the executions. All right, let's line them up, see how they happened. So we went in here, and we'll get the entries first, then we'll look at the take profits. And you'll notice it doesn't say demo in here, so these are live trades. And I point that out because I want you to see that I do this. I don't just talk about it, okay? And let's see. So going on down. Oh, lost my ticket. Where'd it go? It's going behind the screen. I'm trying to keep it on top of the screen. We got that one, and we have this one. Okay. Let's see. So move this on down here. There we go. We'll scroll this down a little bit. And basically here is where let me move that over. What I can do is, all right, so actually since we went both directions, we bought a 2051.85. Okay, so we bought a 2051.85. It's pretty much right here. And we sold, okay, a 2046.25 contract. So go right down here, 2046 contract there. We did them right on the top of the hour, so I should actually move those arrows over. So you can see the execution time there was at 140. Okay, it was at 140 and 53 seconds. Okay, notice both of them. I mean, there's 20 seconds between them there. So that's just me being slow on that trade, but because we're talking through it all here. And I'll just delete this stupid arrow. Make a new one. It didn't want to move. All right, so right over here. So basically, we're looking at saying, hey, the market's gonna, bust through this level down here, or maybe a little bit higher. And so let's take advantage of that. Let's see if we can get some contracts on cheap. Well, I can buy one right here for $15. I bought 10 of them for $15, so I had a little over $150 risk. Then over here, I sold to them for basically $84.25. So, also about $150 risk on the trade. And then what I did, as soon as I put those contracts on, so I bought 10, saying the market was going to go up. I sold 10, saying the market was going to go down. And then after that, I put in a take profit order. So that was, we went back and we were going through those. And we can sort of look at the life of the trade here. Okay. So on the life of the trade, we went in, we bought these, we sold these, we just went over that. And then we put in the take profits right there. So basically said, hey, I sold it I bought one for 15, I sold one for $15 risk, $85 risk, $15 risk. So just keeping the math simple. So buying one for 15, selling one for $15 risk, that's $30 risk. So I need to make $30. And probably I don't expect to win on both sides, so I need to expect one side to lose. So I need to net $45 on one side or the other. Okay? So yeah, I'm not worrying about the quarters here. I'm just going in for the dollars, not getting too picky. So 84.25, basically 40, $45 lower right there, $40, 15.25, pretty much sell 45 higher, right around 60, put in my take profits. It goes on down and it's profiting while it's dropping. Okay? So we see as it was moving down right here, I was actually up a couple $100 on one side. But if I closed out right then and it kept dropping, then I'd make 200, lose 150 on the other side, I'd only be up $50. So I could do that It's not a horrible idea. You can sell one, buy it back when you're break even on the other side. If it oscillates back, awesome. But, I found this works well. And then, market keeps moving. And then it starts going back up, right? So it starts going up, starts going down. And as I see, we see the oscillation. So it's going up, it's going down, it's going up, it's going down. We're making money on both sides, making money on the short side, making money on the long side again. And then it keeps rising. And then it closes out when we're basically P&L's up like, 600 on the trade. And so I think we came out a little bit ahead on that one. But anyway, so went on up there, and then 465. There we go, not 600, 465. So we're at 61.75 right there, current price. Boom, I execute my order to get out of the trade. Okay, so we see we're up 465. Well, I lost basically $150 on this side, right? I made $465 on this side, right? So if I made, let's just keep it simple. If I lost 150 and I made 450, then I get to keep 300. Okay, so I lost 150 on my short. I made 450 on my long. I get to keep $300. So after that, then you can see my order got executed to sell right there. Sold at $60. Now, if I would have held on to it, would I have potentially made more money? Yeah, but that thing's like right on the price. Okay, I could have also lost everything if it would expired just a tick below 2051.85. And I mean, look, we had another one right here. If you would have put that thing on, you could tell we already would have made our profit, right? It's already moved up the few points needed. You already would have made another $300 just in the last 5 minutes. So that was $300, and we entered on the trade at what time? Let's see again, just to put them side by side. 13:20. 13 minutes later, we closed the trade out for profit, did 10 contracts, made $300 in real money. Right here, same thing, 5 minutes. I can already show you. I mean, I was talking through this trade, so I missed that one. But right there in 5 minutes, I mean, you put the trade on right at the top of the hour like we did before, put on the strangle, set the take profit. It's already hit the take profit goal. Okay? These are really simple trades to execute. Looking for about a $30 risk on the trade. Don't get picky about, dollars, a dollar here or there. And then we're looking to pretty much make a $45 profit on either side, so it covers $15 risk on the other side. The big thing is I don't just want to willy-nilly do these because it can be really flat and you can just get hammered. So I want it when I see volumes exceeding expectations. Ideally when I see it rising, okay? And I want to know what that expected range is so I'm not just randomly buying strikes that are way, way too far beyond the expected move. So I want it to move further than my strike. That makes it easier for me to get my profit. It needs to. Often for me to get my profit. I want it to move further than my strike. So I want that strike to be within the range when I put that strangle on. So I hope that made sense to you, and you got to see a live trade there and walk through that. Hopefully you can pick some of those pieces up, and it'll help you, in improving your own trading. But just, one of many live examples that you can tell over and over again today, it did very well. And if you're making 1-to-1, if you at least make, at least half of them profit, you're good. And look at how many of these hit the range, hit the range, hit the range, hit the range. That one right there in the last 5 minutes, boom, hit the range. Came on down here. You would have taken profit. We take profit before we hit the range. Go right there, hits the range, goes down, goes up, profit, hits the range, hits the range, hits the range again. I mean, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades in a row. Okay, so this is why I like Nadex. This is why I'm always talking about Nadex. And so I want you to get the concept there, and hopefully I'm just trying to help you out. All right, so Nadex, what about it? What has defined risk? If I risk $30, I won't lose more than $30. If I do 10 contracts, I won't lose more than 300, and I don't get stopped out on the trade. So you got that defined max loss. You could do it for nighttime trading. You need to, be on top of your game, understand a few things about expected volume. You need some volume for the market to move. If it's low, you want to be looking at possibly in the monies. But there are ways to do it on the 5 minutes at night. I usually focus on Aussie dollar, dollar yen. So, low risk, no stop loss. You can go for a 1-to-1 risk reward. So, The biggest mistake I'll see people make on the 5-minute binaries is they'll chase their orders because they move so fast. So they go in to buy, like they're like, I want to get filled at 15, and so they put their order in at 15, it goes to 15.25, and all of a sudden they can't get filled. So I usually go in and I put it a few bucks above, maybe 20, okay? Especially in the 5 minutes because they move so fast. So if I want to get filled at 15, I see the market at 15, I want to set my order like at 20, 25, whatever. What is my worst limit I'm willing to accept and put that in? Otherwise, I'm going to chase it, and the trade's going to be over before it starts. Whereas if I would have put in like 20, 25 to begin with, I would have got filled at 15.25. But then it's at 15.25, and I go to edit it to 15.25, and then what happens? It's at 16. And then I chase this whole thing all the way up, and I just get frustrated. Okay? And again, you're using limit orders. So a limit order is exactly that. It's a limit. This is the most I am willing to pay to do this trade. That's what you're saying when you do a limit order. And so if you're willing to pay $15 and you put in I'll buy for 15, you'll get filled at 15 or better. Okay? Meaning you may get filled at lower. If you say I'm willing to sell at 60, you'll get filled at 60 or better. So pretty simple. So I go over here and I open up and I'm looking at these, 5-minute contracts. And let's say I did want to get filled on this contract at $22. I may go in there and put in an order like at 30. And look how it went from 22 to 23 to 27 to 30 while I was talking. Okay? They move very fast. So if I don't go in and put a price in, that's at 32, 33. If I don't put a price in, 35, this thing just went, lightning fast. If I don't put a price in, now it's at 47. See how fast they move? Okay? If I don't put that in, then I'm not probably going to get my order filled. So I got to put it a little above where the market is. If I want that contract, what is the worst price I'm willing to accept when I'm doing a buy? If I'm doing a sell, if we go to the flip side, I just saw this thing go, move massively. But if I was doing a sell, and I want to get filled on this trade, and I saw this thing at 70, and then it went to 50, and then it went to 40. But if I want to get filled at that, and it was, let's say, at 40, then I may put in a $30 order. Because if I would have put it in at 41.25, by the time I submitted my order, it would have been at 37, and then 30. Okay? So, if I want to be patient and let it come back, I can. But maybe it hits my take profit and comes back by the time that happens. So what limit is about is what is the highest price you're willing to pay when you buy, what is the lowest price you're willing to pay when you sell. If you'll put that in versus simply the quote on the screen, you'll get the best price available at the moment you enter that trade. For instance, if I would have entered this at 30 and right now it's at 34, I would get filled at 34 or maybe 33.75 when it ticked right there. But if I put it in at 30, when it's at 30 or 32, it may drop to 24. I think go from 34 to 24 in like a heartbeat. 34, 20, 28, 24. So if you just watch the price, you'll see how fast these move, and that's why you need to use a little bit higher price on your buys, a little bit lower price on your sells. So that way you can focus on then putting in your take profit. Now, don't be stupid and put in a $90 order, when it's a $20 buy. That isn't going to help you. You may get filled at 90, right? So put in the worst price you're willing to accept. If you can't get it, you don't want to be in. That'll help you a ton when trading those 5-minute contracts. Stay right there. We'll be back right after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Alrighty, folks, welcome back here to the Diagnostic Trading Hour. And let me see what else we got on our list. I got quite a few things on the list. We'll see how many we can get to. We got a little bit of time left. And here we go. Okay. So, talking about the limit orders, we got that covered. You can use this for Nadex spreads for defined risk. Nadex is also added. Let me show this to you. On their binaries, they've added in a new market, the China 50. And I honestly haven't played with it that much yet. There's not exactly a lot of contract going on right there. So I haven't dove in a lot of detail at the moment. They need a little bit more than weeklies for me. I'm not really a big weekly trader. Now, I think they do open up with the nighttime and the intradays. We'll see if they've listed. Let me go in. We'll just hop on their website. Okay. So if we go over on their website, we go to markets. Let me see if they've updated, because they just released these. The contract specs, go down to international markets, China 50. There we go. Okay, so we got China 50. They got all the basically it rolls every single month. See, January, February, March, April, May, June, July, August, September, October, November, December. So it's rolling every month. It's based on the SGX, FTSE Zinhao China A50 Index Futures. Okay. And then if we roll on down here, what do they got? They got daily and weekly contracts. They start at 9 p.m. at night and they go to 3:55 in the morning. Okay. So those are the hours they're open. So even if you're trading the weeklies, that's what the hours they're going to be open, 9 p.m. to 3:55 in the morning. And then your daily contracts they have 20 strikes. They're 20 ticks wide. And there's 15 contracts. So again, starting at 9 p.m. to 3:55 in the morning. And those are dailies, which lasts about 7 hours. So I'm a little bit more into the intraday, shorter term time frame. But if you're interested in trading on the daily or the weekly contracts, and if you are a China 50 trader there, where you like to go in and trade the China A50 Index futures, then that may be something you want to check into. Okay? So just getting you that update. And then volatility. We talked about that being great for these 20-minute contracts. And to show you some examples, NASDAQ doing it over and over again. So buys and sells, some great examples here. And then another trader sent these over to me. They were looking at them. And then another example right there on the Russell. I mean, it's boom, 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 hitting it again. And to sort of try to plot against the strikes on there where they're putting them for me. But that was pretty cool. So thanks for sending those over. And here's a bunch of strangles put on by another trader. He just sent me these. S&P 500. He's doing these on the 140. So up $60 right there. 26, 45, 70. So doing really, really well. Make sure you take those profits. So on those trades, but doing really well and across all 4 indices at the exact same time. So that is fantastic. So if we look at it, we add it together, got about a $20, $25 risk on each side. So knock $100 off. We got 70, 100, 200. So about $200, knock $100. So basically up $100 on the trades right now, and doing a great job on it. So that's awesome. Some other traders taking advantage of these too. And let's see what else we have going in. It looks like our time is up for today. But I hope you all have a great day. You have a great weekend. And I will see you next Tuesday right here on the Diagnostic Trading Hour and tomorrow morning on the Bull Bear Binary Option Hour.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.